Welcome to the Techno Fundamental Report for February the 26th. I can remember when I first started out in the business, every Friday night I would watch Wall Street Week with Louis Rukeyser. It was a great show. It was a great period of time for me. I enjoyed the show tremendously. Look at all the guests he would have. Byron Ween, Peter Lynch, John Templeton. And then he had his regular group, which is his elves. Anyway, it was a great show. Miss it greatly. It was a good period. Epiceta says some things are up to us and some are not. When you're dealing with the stock market, you have to realize the market doesn't know who you are, doesn't know who I am, doesn't care. And so you really don't have a lot of control over the stock market. So you have to use research and portfolio management to deal with it. I just wanted to point out that, the market is starting to broaden out. We're starting to see stocks other than the Mag 7 lead the way. You can see that with this equal weight S&P 500 versus the market cap weighted of S&P 500. So market cap weighted would be the $1 trillion club, and the equal weight would be the other 493. So you can see here that, since the year began, the equal weight is greatly outperforming the market cap weighted. So it's just telling you the market is starting to broaden out. So let's talk about portfolio management. We use an approach called focus investing. We want to focus on one concept, one strategy, and get really good at it. So this is what Buffett did. Buffett was a big believer in focus investing. Now, as he got larger and his fund got into the 100 billions, he could no longer really do focus investing. But portfolio management, especially with focus investing, is very important. The art and science of selecting and overseeing a group of investments that meet the long-term financial objectives and risk tolerance of a client, a company, or an institution. So you want to use certain portfolio management skills when you're dealing with the stock market, especially when you're a focused investor. So Livermore says here, he says, don't buy breakouts without proof. Livermore, a legendary stock operator, emphasized waiting for confirmation before fully committing to a trade. He believed that big movements take time to develop and often suggested waiting for the line of least resistance to define itself rather than buying the initial potentially false breakout. So what Livermore has talked about in his book, which is a really good book, he states that sometimes there's manipulation going on, and you just have to be aware of that. So when you look at a breakout, and we're talking about portfolio management here, the way we do it is we'll do a test buy where like a half of a cup. Our normal position, let's say, is 10%. What we'll do initially is do 5%. We'll do half what we normally would do. So here's an example of a stock that we do own. We own Advanced Energy Industries. You can see here, kind of going back in time, just to use this as an example, we would have, on this breakout here, which was a pocket pivot, on this breakout, we would have committed about 5% of our assets. Then we want the stock to prove itself, but then it failed. So we cut our losses quickly. We just realized that it's just the timing is not right. But we keep an eye on it. Then you can see here it stabilized and then it broke out again. So that's where we would have recommitted, but then again, half of our normal position. We went to 0 here. We're back to a half of a position here. So what happens here is the stock starts to prove itself. It starts to uptick, stabilize, and then uptick again. So then at this point, we would probably add another 5% because we have cushion built up and safety built up from this initial buy. So when it comes to portfolio management, you need to have a system and a structure. Now, I did want to point out that mortgage rates are really starting to come down here. We're down to almost below 6% on the 30-year mortgage. So that's a really good sign for things. And, as we look at our interest rate indicator, which is the power index, you can see it somewhat has stabilized below zero. So we're starting to see very stable interest rates. And if corporate earnings continue to improve, that'll drive the market higher. So the primary trend continues to be up. This is the S&P and the NASDAQ. Now, the founder of Fidelity basically said that if he was on a desert island and he had one indicator, Ned Johnson was the founder of Fidelity. My memory kind of failed me there. But he was asked if he was going to use one indicator, what would it be? And he said the 200-day moving average. So you can see here that since the market low back in April, the primary trend has continued to be up. So this is a bull market. We're also noticing that the new lows on the New York Stock Exchange are starting, they're elevated and too high. So we want to see them get back below 40 a day. Semiconductors continue to act well. This is the VanEck Semiconductor Index. You can see here it's breaking out of a base, continues to look well. Now we do have NVIDIA's earnings this afternoon. We'll just have to see. The financial services sector by the XLF, which is a financial sector ETF, you can see here it's been kind of really getting hit here. And it has something to do with AI. I'm not really sure yet. But the financial stocks continue to look, they look troubling here. It's not good. It's not a good sign. So we'll just have to keep an eye on it. Now, the overall NASDAQ, you can see here, we hit our high here, which was somewhat of a double top. We've come down, starting to stabilize, and we broke out somewhat today. So the NASDAQ is looking better. On the S&P, same thing. We got the same kind of breakout, and it looks fine. So if you have any questions, please let me know. Thank you very much.